one programming note on the right-hand side. Hopefully you'll be able to see a text area where you can submit your questions as needed. Let me begin then by doing quick introductions to our esteemed panel of 4 speakers. This will be the order of the conversation today. It's a real pleasure to introduce to you Nick Jaharis, who runs Maybank Islamic out of the DIFC. Over 20 years of experience in Islamic finance with global work experience in Malaysia, Kuwait, Bahrain, and KSA. Welcome, Nick, and thank you for joining. We have Mr. Ahsan Ali, who runs corporate institutional banking business globally at Standard Chartered Sadiq Business, and again, with 25 years plus of experience in banking and Islamic finance. Welcome, Ahsan. We have Mr. Ahmed Tirmizi, MD, Head of Sharia and CIB at First Abu Dhabi Bank Islamic. Again, we're talking 20 years of experience in banking and Sharia Islamic finance. Welcome, Ahmed. And last but not least, it's a real pleasure to also include Mr. Mohammed Paracha, who is a lawyer specializing in banking Islamic finance and runs the Islamic practice for Middle East and Africa at Norton Rose. Welcome, Mohammed. Very good. So before beginning, I thought what I would do is spend just a few minutes putting today's conversation into perspective. We're talking about Islamic finance, and we are virtually at the DIFC, of course. And the reason we're doing that is because, we are a financial center, and we are in Dubai. Dubai's aspirations have always been to diversify away from hydrocarbons, and that experiment has been very successful over the last 20 years, certainly. And the DIFC in its 16th year we've tried to play a pivotal role in that by providing an ecosystem where the world's top financial and non-financial firms cluster. In that time, we've enabled, for the sake of the growth of Dubai's economy and the UAE's economy, capital and talent to aggregate in our center. And today, this is a center that has over $700 billion of financial assets, a population of over 25,000 people, and over 2,500 firms. Our link with Dubai is self-evident in our name, and Dubai itself has a special place in the world of Islamic finance. I think it's safe to say that we are a birthplace for Islamic finance, with the esteemed history of institutions like Dubai Islamic Bank, formed in 1976, a real key player, linchpin in the sector. And of course, there is Sheikh Mohammed bin Rashid's vision on ensuring that Dubai continue to play an important role in Islamic finance and Islamic economy, something which many of us are very proud of. That's the first piece. The second piece is interesting because this is also a place where banking and intermediation happens. Very interesting. Islamic or non-Islamic, 26 of the globe's 30 globally systemically important institutions are here. I've talked about the depth of the market. There are hundreds of funds here. Over 40 firms on average conduct Islamic finance transactions. Last year, our Islamic finance balance sheet increased by, I think, 40% year on year. So it was a really good year. We continue to attract leading firms in the world, such as Maybank Islamic, and as of last week, even institutions like Samba, which will be joining DIFC and will be engaging in Islamic finance. And so we set the stage for a center that has relevance for Islamic finance and for Dubai. We can't ignore what's happened globally. COVID has happened. It has created a lot of uncertainty globally and regionally. There's been dislocation. There has been a cessation of economic activity, and a number of governments have taken a number of very, very important monetary and fiscal policies to address this unprecedented set of events as best as they can, often during limited time and information. It takes me back to 10 years where in the post the financial crisis, I remember so many of my esteemed colleagues, including this panel, were involved in discussions around how Islamic finance could play a role in getting the world out of the previous recession. And many scholars and bankers talked about how Islamic finance had in it the structural capabilities to not only provide a recovery from the previous crisis, but also maybe to prevent it. The objective today is slightly different. The objective for today's conversation is to naturally understand and acknowledge what's been happening and really go through with some detail how this COVID-19 pandemic is impacting Islamic finance from a policy perspective, a business deals perspective, a Sharia perspective, and of course a legal perspective. And I've also asked our panelists, having done that, to shine a light, perhaps in the spirit of inquiry, and see what it is that Islamic finance can actually also do as we talk about recovery, and we can discuss and debate how imminent we think that is. So without further ado, let's get the experts into the conversation. The way I'd like to do this is I'm going to begin with Nick Joharis and ask Nick to give us a market overview with a particular maybe focus on what's been happening from a government and regulatory response to this crisis in the region, maybe beginning with the GCC. Nick, over to you.
Thank you, Salman. Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Good morning, good afternoon, and good evening to all of you, wherever you are in this world. Hope you are safe and stay safe at all times. Right, Salman, going to what governments are doing currently. From the most recent news that I've gathered, the combined stimulus package that was announced by the governments in the GCC has been more than $200 billion. UAE announced $77 billion, Saudi 56.5, and so on. But what I want to highlight here is the similarities of these stimulus packages.
DIFC'nin bu business developer'ı. Bu herif kim biliyor musun?
Kim?
NJ, Islamic. Tanıştıracağınız da
Excuse me, just a reminder to everybody to please keep your microphones muted, except for our panelists. Thank you, everybody. I'm sorry, Nick.
Right.
Please continue.
There are similarities in these stimulus packages issued by the governments of the GCC. I would divide it into four. Firstly is zero-cost funding to the banks. Governments are giving zero-cost funding to the banks to support our customers, either because we are deferring our loans financing payments, or we are lending more to our customers to promote economic activities. More references were given by the government to help the private corporate customers, the SMEs, and individuals, being, I would imagine, the most vulnerable segment in this crisis. Secondly, government focuses on guarantees to SMEs. Again, it's SMEs, and also cover SMEs getting loan or financing guarantee program. Thirdly, government focus on covering some periodic fees to reduce the burden of businesses and promote social distancing. So that's very unique to the current crisis, to promote social distancing. Examples I have here is governments are giving 6-month suspension of work permit fees. That is to reduce burden of business. And they have increased limit for contactless payment. Different limit to different countries. But that is to promote social distancing. And there are no more fees for POS, point of sales, or ATM withdrawals. Fourthly, governments are, in general, giving catalysts for banks to lend. Zero-cost funding, I mentioned earlier, is one of the initiatives. Secondly, governments also, the central bank in that matter, reduce cash reserve ratio for banks so that banks would have more liquidity. And the central bank also reduced the discount rate to make financing cheaper to the public. The banks again, the governments again increase lending limits to SMEs. Again, SMEs is in the picture. From 90 or typically 80-90% lending limits to 100%. So banks now can give lending to SMEs up to 100% of their application. And Salman, Alhamdulillah, we can see that banks are responding positively to the government initiatives. It was reported yesterday, I think, or 2 days ago, that 17 banks in UAE has availed more than 50% of the zero-cost funding provided by the UAE central government. That's very promising. And we have seen many banks in GCC which are offering 3 to 6 months deferrals of loan payments. And even up to December 2020, there's 9 months deferral of loan payments to the customers. There are banks that provide refunds of charges for cancellation of travel bookings. That's phenomenal. It never happens before. And there is a bank in GCC which actually give reversal of loan to their customers for the month of March. Who would give that, right? And it's not only banks that are giving leeways or who are participating in this initiative. Non-financial institutions like DIFC itself, right? You are offering deferred payment for our leases. Yeah, you are waiver licensing fees for new companies. You know what's pleasing me the most here, as one of the Islamic banking practitioner, is the fact that all of us, whether we realize it or not, we are applying more and more maqasid al-Sharia in our banking practices. I take note that the banks would have to be guided by banking regulations, our capital ratios, our LCR, LDR, etc. But by keeping our customers afloat in these trying times as much as we could, we are indeed applying the intended outcome of Sharia in our business, such as protecting of property, life, and progeny, right? And this is indeed the core reason for the existence of Islamic bank in this world, which is converging the intended outcome of Sharia to our banking operations. All right, Salman, I will stop there for now. Over to you.
Sure, Nick, that was really interesting. Just a quick one. I was intrigued by your discussion on Maqasid al-Sharia. Just so that I understand, maybe, what we're seeing is a de facto alignment of policies with Islamic principles. Is that to say that that there aren't any specific Islamic finance-related policies, or is it that the policies are completely aligned with the principles of Sharia?
Right. The policies are, to me, a short answer to that, the policies are completely aligned to the principles of Sharia. Yeah.
Okay, very good. Well, Nick, thank you so much for that brief introduction into kind of the preliminary policy and governmental response regionally to COVID-19. I suppose the conversation naturally moves from policy response to a business response, and for that I'd like to pull in Ahsan for a discussion on essentially what he is seeing from a business pipeline perspective, given the economic realities and the policy responses. What is what is Standard Chartered Sadiq seeing in terms of deals? What kinds of pipeline are we seeing? Are there any new kind of initiatives? How are things going, Ahsan, from your perspective?
Thank you, Salman. Good morning, everybody. Just a note on housekeeping. This link is breaking in the middle, so if it does, then you can move on and then I can rejoin later. But for now, in terms of the markets, I mean, we all saw that up from, I think, 15 February onwards, mid-Feb onwards, until mid of April, pretty much the world's capital markets were sort of seized up. And similar effect we had on the sukuk markets here and the syndication financings here in the region as well. So, I mean, and obviously, in terms of volatility and the liquidity conditions in the global as well as in the Middle East, that affected the markets. But we saw, the U.S. markets opened up once the Fed, put in lots of money into the system. And in the Gulf markets, then I think the bond markets first opened up sometime in early April with issuances from the government of Qatar, government of Abu Dhabi, and then followed by Saudi. And that really opened up the market. But most of it was in the conventional bond format. And I think the target was to get the international liquidity, rather than target the regional liquidity. Because I think the regional liquidity was still a bit, difficult to come by. But as we saw, as Nick said, as the central banks eased up the liquidity conditions, as lots of money flowed back into the banking system, we saw the Sukuk market also now opening up with the first issuance by government of Bahrain on 7th of May. It was a dual tranche issuance, $1 billion Sukuk 4.5 year and $1 billion conventional bond for 10 years. And the reception of it was, I think, quite phenomenal. And the book was oversubscribed, almost 5.5, 6 times. And not just the investors from outside the region, but the Sukuk had a 50% take up from within the region as well. So it proved, I think, that the liquidity is flowing back into the system. One of the other, I think, indicators is the difference between, say, IBOR, which is our UAE benchmark rate, and LIBOR, US dollar LIBOR. And at one point in time, the difference was huge, I think about 100 basis points. And now it has narrowed down considerably. So this all points out, I think, that the liquidity is back into the system. And this augurs well for the issuers who have been sort of sitting on the sidelines. As you know, there is a requirement from the sovereigns because of both low oil prices as well as lower economic activity. So they need to bridge the funding gap, and they will access the market both in the conventional bond and the Sukuk format. And of course, there is a lot of, I think, FI issuance, which is in the pipeline. Islamic financial institutions, I would say, which is both for senior format as well as tier 1, tier 2 format. So I think with the markets now looking to open up, all of the issuances from a business perspective, we see that the pipeline is strong. And as soon as the market conditions are right and ripened, we will see a lot of issuance coming back into the flow. So overall, I think for the year, I think, and perhaps we will see a busier summer than we have seen earlier because, of the loss of a couple of months. I think a lot of issuers would not mind even coming into the market during the traditional, slow months of summer. So that is from a capital markets activity perspective. I think the other point I wanted to say is the link between Islamic banking or Islamic capital market activities and ESG or green Sukuk. So while we have seen that the world has taken up the ESG, the US SDG sustainable financing goals, etc., a lot of financing, both in the bond market and the international loan market now is moving towards that. I think the Islamic activity or Islamic finance has been a bit slow to take that up, though the principles are aligned. So we all know that the principles of Sharia, which is ethical, sustainable financing, is well aligned to the international sustainable UN SDG goals. However, the Islamic markets have been a bit slow to take it up. So last year in 2019, we saw the issuance from Majid Al Khatem here in the corporate space in the green Sukuk format. We saw a €1 billion issuance from IDB last year in December on their social Sukuk format, social and the sustainability format. So we see more issuers going into that way. An interesting thing is that in response to the COVID-19 situation, we are seeing more COVID-19 themed issuances coming into the market. Currently, all of them are in the conventional bond format, where the issuers pledge to use part or whole of the proceeds towards COVID-19 relief and rehabilitation efforts. So we saw one from Government of Indonesia, a $4.3 billion issuance in the conventional format. And you will see more sovereigns and multilaterals come up in that format on the COVID-19 theme issuances. So this is an interesting aspect, and this is, we think, is a a part of the overall sustainability agenda as well. So, with that, I'll stop, Salman, if you have any follow-up questions.
Thank you, Ehsan. Very interesting indeed. Your observation on ESG or even SDG is particularly interesting. We actually did. I recognize your observation on Islamic finance participation. I'm happy to say that the Dubai Islamic Economy Development Center (DIDC) and DIFC and DFM signed an agreement last year with the Climate Bonds Initiative to try and promote the use and standardization of green sukuk. So I recognize that's an important part. And in maybe later on in the Q&A section, I'd like to discuss how we can use that to get a bit more into the infrastructure space as we talk about recovery. We've talked about a policy response. We've talked about the environment in which our banks are operating and conducting business. I think it would be important to take a step back and take stock of what's been said, which is that the policy response has very strong ethical and Sharia backing. The markets continue to do their work. We should not forget the principles behind Sharia finance, and it would be good to get the perspectives from a Sharia perspective from Ahmed Tirmizi to understand kind of these trade-offs, if any, and the degree of flexibility that financial institutions have. How does that stack up from a Sharia perspective? What's the context behind it? So Ahmed, let me invite you to the conversation and look forward to your views. Over to you, Ahmed. Ahmed, are you with us? Okay. What we'll do is, if we don't get Mr. Ahmed right now, we will move on to the legal part of the conversation with Mohammed Paracha, and we'll come back to Ahmed shortly. If I might just add, so similar to the Sharia questions that we've talked about. Oh, Ahmed, are you back? Can't hear you. No problem. Welcome. Please, the floor is yours. The floor is yours.
I lost the whole thing, Salman.
No problem. No problem. In a nutshell, I was introducing you by saying that while we talk about the policy response, which has been imbued with Sharia principles, and we talk about pipeline and business, it would be good to get a Sharia perspective from a principles point of view on the kinds of decision making and trade-offs, if any, that bankers and policymakers are seeing that are relevant from a Sharia perspective. I welcome you to provide your insights. Thank you.
Well, first of all, thank you, Salman and DIFC for having me in the session. Respected panelists and viewers everywhere. Now, I would start by saying that the whole pandemic is affecting everyone in every aspect of life. Definitely the economies. Now, as a component of the global community or global economy, I think Islamic finance need to also react accordingly and correctly. And I think it is a timely sort of reminder for the players in Islamic finance to sort of take a pause, reflect on our values and principle, and perhaps remind ourselves of the value that we hold dear to our hearts, in order for us to respond to what's happening, because this is affecting everyone and we are part of this. Now, when we talk about Sharia principles that we build the industry upon, or that governs the aspects of the industry, I would like to say that the Sharia rules and principles that we have are very much alive and dynamic. So we have the sufficient flexibility in our principle to be able to face situations like this. So our principle are not static, that and that it cannot respond to situation. For example, I'll just give you some example. We have legal maxims, what we call in fiqh as qawaid fiqhiyah, that talks about in Arabic we call al-mashaqqa tajlibu taysir, hardship begets facility. Or we have the principles of ad-darar yuzal, harm must be removed, and also the famous principle of taghayyur al-ahkam bi taghayyur al-zaman. So the rules can change depending on time or depending on situation. So scholars alike, need to guide the industry based on the flexibility that we have. So that is like on a macro level. When we talk about a more micro level on implementing some of this principle in our practices, specifically in banking, when you talk about people having difficulties in fulfilling their obligation, so we know the Quran enjoins that contracts are to be fulfilled, awfu bil uqud, but you also have the Quran enjoining us wa in kana zu asratin fanaziratun ila maisarah. So when the people are in difficulties, you give them time until they are better off. So striking the balance between these two, I think, is also another important thing that we need to do between what I can say contractual obligation and our social obligation as member of the community. And lastly, and I will stop at this, this situation shows in more ways than other or more than the importance of other components of Islamic finance. So we have the Waqaf institution, the Zakat institution, the Sadaqah institutions, and so on. So when we come to this time, we know how important these are, and probably in the past we have not been giving a lot of attention to it. So this is a timely reminder for us that we need to balance that, so that in situation like this, even it will balance the equation. Even the commercial side of Islamic finance could take some benefit out of it.
Ahmad, thank you, Ahmad. I had just one quick follow-up. Nick had talked about, obviously, the observation that a lot of the policies from regional governments and regulators are de facto Sharia, filled with the spirit of Sharia. At the risk of asking a question that you might have already answered, a point of clarification. Are there any then formal guidelines from Sharia bodies or the regulators on things like forgiveness or deferrals, or is it just is it kind of based on conscience or?
Yes and no. So that is exactly one of the debated topics among scholars within the past few weeks. When we talk about deferment of financial obligation, when you talk about Islamic finance, I think this question needs to be answered specifically to what type of obligation that we are talking about, because Islamic finance contracts differ from one to another depending on the type of contract that we use. Now, non-debt based contract would be slightly more flexible. Contracts like ijara or wakala, there are a lot of room for you to reschedule or restructure those type of contracts. But debt-based contracts such as murabahas, you have some limitation to that. For example, deferring a debt, we are not allowed to charge any extra amount, because that would then amount to riba or interest. However, in certain markets, how the murabaha contract is also play a role here. For example, in certain countries where you have a murabaha with a ceiling rate, like in Malaysia or in some parts of Saudi, you can restructure so long as you don't breach that rate. And similarly, in some part of GCC, you have murabahas that has that rollover feature, so that can also facilitate the issue of liquidity, where you can do a rollover without using the current contract. So generally, I would say there are guidelines issued by authorities, especially in markets where you have a central body evaluate line. So basically, they are the same. That might be slightly different, but that depends on the market itself. For example, there are certain countries that forces the moratorium. For example, you have to give it to the customers. In certain countries, these are voluntarily, and also in certain countries, the banks are being supported by zero cost funding. So those things play a role in determining what type of approach country. Thank you. I hope that answers the question.
No, that's very good. Thank you, Ahmed. I'd like to now pull in Mohammed Paracha into the conversation. Last but certainly not least, we've talked about obviously policy, business, Sharia. I'd like to pull in Mohammed's perspectives from two vantage points. One is, naturally, all of these have an implication on the process and documentation and contractual nature of Islamic finance. I'd love to get Mohammed's views on that. But also, Mohammed is an advisor to institutions across MENA, and so it would be good to get his reflections on everything that's been talked about from a context perspective. Mohammed, over to you.
Sure. Thanks, Salman, and good morning to everyone, and assalamu alaikum. So it's always difficult being the last person to come on, because everything that you've wanted to say has already been covered by your learned fellow panelists, but I'll give it my best shot. So look, we have a global practice at Norton Rose Fulbright. So what I'm going to talk about is regional, but also international. And when I talk international, it's due to a sort of Middle Eastern anchor in that discussion. I think, as panelists have mentioned, there's been a real race for liquidity, and we've seen that both in the region and globally. Banks have been, for the very first time, under pressure from regulators who have been leaning on them for not only forbearance, but also pumping in liquidity left, right, and centre at quite often low rates or no rates in terms of zero cost of funding. And that's not been seen before. And various commentators have said that the global financial crisis was all about how societies came together to bail out the banks. And now this is really perceived as an opportunity in the GVC, the global virus crisis, as it's become known as, for the banks to actually support societies and to support customers around the world, and in particular in the SME and in the retail space, with things like mortgage holidays, rental deferral holidays, and those kinds of things. So there's been a real race to liquidity, and depending on who you are, you've been able to tap into standby facilities, RCFs, term loans. All of that has been happening quite significantly in the region. Now, it depends on what your bargaining position is, whether you're going to be paying more for that, but generally there's been this race to liquidity. What's been interesting is that there has been a lot of chatter around restructuring. We have one very prominent business at the moment in the UAE, which is currently in everyone's on the spotlight and in the headlines. But despite that chatter around restructuring activity, the world hasn't really seen any significant restructuring. And in the region, we haven't seen, the whole sort of floodgates opening, which is what everyone expected. So that's very much a watch this space to see how that develops over the coming weeks and months. This race to liquidity does create regulatory pressures. And I think that's something that, as lawyers, we are often advising our clients on, because in the rush to forbear, whether on a Sharia basis or because of regulator pressure, what's happening is that there's a potential, what I call liability tail forming. And that liability tail arises because you have to ask yourself whether banks have been able to adopt the same procedures and policies that they would normally expect to follow if they were all working in their organization in an office environment. So things like, when we all get back to work, are regulators going to find that there have been irregularities when it comes to AML and compliance? What's that regulatory tail going to look like? In putting out the money, regulators have been putting pressure on banks to finance, but there's been hardly any adjustment to how the banks are dealing with capital adequacy and the risk weighting of those assets that are being financed. So how is that going to translate? How is that going to translate into NPLs, into non-performing loans, and portfolio management on this book that's developing as a result of this liquidity being taken in to support all these businesses? Now, some banks will be no doubt looking at their book and asking themselves the question, how do they move that around, particularly when looking at the capital adequacy question? But there's a little bit of wait and see. So my own experience, Salman, has been there's been a lot of firefighting, putting money into corporates who are in dire need. But perhaps at this point, what I will move on to is your point regarding the crux of the matter from a lawyer's perspective. And what I've been seeing is a few things. So first of all, in the UAE, we have the UAE Central Bank has issued guidance through the higher Sharia authority on what can and cannot be done in an Islamic financing situation. And just to quote paragraph 4 from that circular, the Islamic financial institution should ease the burden from customers affected by the pandemic and abide by the instructions of the central bank in this regard. And in the event that part of the installments are to be postponed, the IFI must adhere to the following parameters. So as has been mentioned by Brother Ahmed and others, Sharia is very important when it comes to Islamic finance in how we document these processes, document what's going to be happening. So in the UAE, the central bank, through the higher Sharia authority, has got very heavily involved in this process and specifically talks about murabaha, istizna, and ijara, and is very clear on what you can and cannot do in relation to those different types of product categories. And when it comes to restructuring, murabaha, when there's an asset sale, there are difficulties, and we can talk about that in more details. The rollover murabaha is, of course, one way to deal with that. So in terms of the UAE, we are seeing real involvement from the regulator and from the higher Sharia authority in giving that guidance. It's not clear what the penalty will be. So I'd be interested to hear if any of the other panelists would know if an Islamic financial institution failed to adhere to those set of guidelines. My second point is in relation to the more what you call process documentation. So yes, we have been seeing underlying obligors asking for deferrals. There have been those requests coming in, and there have been a lot of discussions around, should we amend and restate the facility, or should we give a payment holiday? And in the worst case scenario, there have been banks who have been saying, well, we need to reserve our rights. Things have gone too far, but quite often they've gone far in financing arrangements which are already perhaps not looking great. Quite often on the other side, if we look at the obligor or the borrower, in this market, what we're also seeing is there being an increased interest in parts of the facility that perhaps we wouldn't look too closely to. So things like material adverse change and material adverse effect. These are two ways in which you have in a financing arrangement some sort of control elements for circumstances such as the pandemic, which were not really envisaged when MAC and MAE were first developed as concepts. So borrowers are very concerned about, well, if they enter into a loan arrangement now, what does that mean for them? Can a bank then pull the rug using these types of clauses? So there's been advice on that. And then the third point, and I'll end on this, Salman, is picking up on points that Ahsan and others have mentioned regarding ESG and green sukuk. I think the future for Islamic finance on the road to post-COVID-19 recovery is quite bright, because like the majority of humanity at the moment, we've now had a period of inward reflection. And I'd like to think that we're not going to necessarily go back to the way in which we did so many things before the COVID-19 crisis. And as humanity and Islamic finance converge in what I call effectively core beliefs of goodness and khair, we see some common themes coming out of this. And that's important to note, because when it comes to green sukuk and those waqf and charitable endowment type projects, I think we're going to see a lot. I myself am working on 2 projects which I think are worthy of mentioning in the context of what's been said earlier by SEB. In relation to green sukuk, there's real effort from the IDB and ISEC in particular, their insurance arm, to try and provide a credit enhancement to sovereign issuers who want to come to market with the green sukuk. So before, there was no insurance wrapper effectively giving a investment grade credit enhancement. There now is. So if there's a sub-investment grade issuer out there that's looking to do a sukuk, whether green or regular, they can go to ISEC, which will support them and make the financing a lot cheaper for them, inshallah. And the second product, which I think could be quite interesting, is that the IDB is also working on what's known as the cash waqf sukuk. And that's quite important, because within the global sort of markets, we've seen a lot of discussion around charity and endowment, but we haven't seen anything formally put together in the form of a waqf sukuk program. And that's something that we hope should come to market also in the coming months. So very interesting future, I think, for Islamic finance in these areas.
Thank you, Mohammed. That was actually a very, very interesting note, which I want to come back to. Now, in terms of format for today, we have about 17 or 18 minutes left for Q&A. There's several questions that have come up. A few of them are quite technical, but while we have Mohammed's assertions kind of fresh in my mind, I wanted to take one of his observations and throw a question back to him and the panel, which is on this notion of the importance of green and sukuk. I like this notion of the convergence of humanity and Islamic finance on the theme of goodness. But when it comes to things like ESG and SDG and infrastructure, right? This has long been what I've argued. It should have been the real strength for Islamic finance, and I don't think it's controversial to say that a lot more can still be done in this space. Now, my question is, despite our best intentions, Mohammed, particularly on ESG and SDG, financing, even if you have financing structures in place, are we bullish or bearish on the liquidity available if oil continues to be that low? Now, oil has nothing to do with Islamic finance per se, but a significant portion of Islamic finance gets done with hydrocarbon-rich economies. So the question, beginning with you and to the panel, is, how do you see oil impacting, our business, our industry, including infrastructure?
So I'll come in, Salman, but as the lawyer on the panel, I'm probably not the best person to talk about liquidity from banks. So one of the others perhaps will give a more accurate answer. But my feeling is that there will be a point when it does impact, and I think that's a natural response. I think for the moment we are seeing banks with enough in terms of their ratios and in terms of the cushion that is expected from a regulatory and legal standpoint. But I think obviously the impact, and we can see this in Saudi Arabia in terms of VAT being increased by a factor of 3, and as well as other sort of sentiments coming out of the largest sort of economy in the region, that there is a worry regarding the long-term impact of low oil prices, and there has to be. It's not rocket science, but I probably can't comment on it any further because you probably need a banker to respond on the substantive point.
Let me ask Nick to jump in, followed by Hassan.
Okay, I think Mohammed has mentioned it quite well in terms of the impact that it will give to the governments. Looking at the way Saudi increased the VAT, they are foreseeing a big impact on the reduction of oil price. To the banks, it's still quite early. Well, there will be a negative impact to the banks, but as Mohammed mentioned correctly, the ratios are very healthy. I mean, the buffer that the banks have in GCC market, even in Asia, is quite strong to withstand dilution of income in the coming months, in coming few months, or even coming to the next, coming to 2021. How it's still early, Salman, to measure this impact, because we are only 2 months, and then the quarterly reports just came up for end of March, and there's no real impact yet for financial statements of any banks for end of March. Probably we're going to see real numbers on the impact the end of the second quarter. Probably by then we're going to have a better idea on how this will have an impact to the financial institution.
If I can come in, Salman, I will give a bit of a different perspective. That while, I mean, obviously, it's no rocket science, as you said, that there may be, if there is a prolonged low price of oil, it does affect the economy. But, most of the GCC countries have, embarked on a diversification path, right? We know, obviously, here, for example, in Dubai, and you also have lots of renewable energy linked projects of the biggest solar power plant coming here. A lot of issuers looking to go into the social and green infrastructure building, etc. So in terms of seeking liquidity from the world for projects here, I think it's important that there is a lot of money worldwide which is moving into the green bucket. So a lot of big fund managers around the world. It started with the Nordic countries first, but now it has become quite mainstream. So the push of liquidity going into ESG bucket or green bucket is increasing day by day. In fact, the social bonds issuance for YTD, despite all this turmoil, so YTD this year in 2020 has already exceeded full year 2019 issuance, right? And the reason for this is because there's a growing pool of liquidity in the world, which is now looking for green and ESG projects. So I think it will accelerate here as well. There is, I mean, fine, there are some oil and gas projects, but even those I think are reducing in importance here. So there is a lot more infrastructure, transportation, other sort of development, green buildings, green energy, etc. And this will naturally fit in well if the investors or the borrowers here want to tap into the growing pool of liquidity in the world in the ESG format. They will turn towards the green, issuances, whether it is in bond or in sukuk format. So I think it is important to attract the green liquidity into this part of the world, and this will be one of the means. So that's why we as a bank are bullish on this particular, green linked financing. In fact, there is another product which is not just on the sukuk format, but also on the financing format, something called sustainability linked financing. So the difference there is that if you do a green bond or a sukuk, your proceeds have to go into green or ESG complied activities from day one. But in a sustainability linked financing or a sustainability linked bond or sukuk, you can, and there are KPIs, key performance indicators, that if you move more and more of your projects into the green bucket, your price or your cost of funding progressively gets reduced. So therefore, this is very attractive for companies who do not have much of green today, but are thinking of moving into that space. And therefore, once they achieve those KPIs, they are assured that their cost of funding will get reduced. progressively over time, as long as they meet certain KPIs. So products like these, I think, will appeal to the borrowers in this particular region as well. While the price of oil may reduce some sort of liquidity here in the region, but I think there is enough liquidity around the world which can be attracted into this region by turning or structuring most of the borrowing or funding needs into a green or an.
It would be, I think Hassan might be frozen. Thank you, Hassan. I think we got the gist of his response. One quick follow-up. It would be interesting to see if talking about Muhammad's reference to cash waqf sukuk, if it would be possible for regional waqf to have specific allocations towards environmentally conscious or friendly projects. But again, I'm talking out of my domain. There is a question from the audience, which I think may require the collective technical expertise of this panel. I'll paraphrase the question, but essentially it's something like: a reading of AOFI rules enforced by UAE Central Bank restricts trading in sukuk issued prior to Jan 2020, subject to Sharia review and AOFI compliance assessment. Now, the claim being made is that this could negatively impact the sukuk markets, and the question is, how are the banks, or the Sharia boards of the banks and fund managers and treasury departments approaching this requirement? I'm wondering if the panel has a view on it. Maybe Ahmed or Hassan to start with.
Sure. I think I can give a bit of more background on the Sharia perspective, and then maybe Hassan can speak on how we implement that. The UAE has adopted IOFI Sharia standards. I think IOFI is known to be one of the standard setting bodies for Islamic finance. They issue Sharia standards, accounting standard, governance standards. So there are about 60 over Sharia standards so far. I think the decision to standardize practices is very noble. It's very required for the industry moving forward. So we've talked about standardization for a long time. Now the UAE has started that move by adopting IOFI. There are 60 over standards, and then the question is about on sukuk. Yes, in any thing, when you start to implement something new, there will be teething issues. Not everyone has adopted IOFI, so I think the central bank realized that. And with regards to investment in sukuk, the higher Sharia authority has sort of heard the concern of the industry, and they have issued another set of guidelines, another set of parameters in which the banks here can still invest in these types of sukuk, even though they are not fully IOFI compliant, but they have another list of criteria, what they call as fundamental violation. So long as the sukuk does not have any of these elements, then the banks have the permission to invest. But there's some timeline given by the central bank for this, and they will be revising this from time to time. So that is kind of a background on the regulation part. Maybe Hassan wants to add on how the market's reacting.
Thank you, Ahmed. Hassan, over to you.
Yeah. So the regulation, etc. So yeah, I mean, as far as objective goals, which we have seen affecting.
Ahsan, hi. We're having trouble hearing you, so maybe you could try again and we'll come back to you. Okay.
Okay. Sorry, can you hear me now?
Let's try again once more, and then if not, we'll go to the next question. Please.
I think, as I said, as explained, are coming and can you hear me?
Yeah, Hassan, I'm afraid I'm going to ask you to maybe log back in. We'll come back to you maybe in a minute or two. Apologies. We have about 4 minutes left. Maybe what I thought, or 3 minutes left. What I thought I would do is maybe conclude with getting each of the panelists' view on how they see the next, based on the information they have, how they see the next 12, 18 months panning out in general in terms of the recovery. And if they have any other final thoughts on what Islamic finance needs to continue to do to play a part in that, maybe beginning with Nick.
Right. In my opinion, I foresee use of a lot more of Islamic social finance by the Islamic banks, be it zakat, sedekah, wakaf, to deal with the economic situation, the science, and also technology. And secondly, I would foresee that all the banks will leverage, including conventional banks, will leverage more on the existing platform to serve the society. The online banking that all the banks and Islamic banks has is a very powerful tool to help the public, individuals, SMEs in general. That's
great. Thank you. Thank you, Nick. Maybe I could get Muhammad Paracha into this, change the order a little bit. Muhammad, your views on the next 12 to 18 months of recovery and anything else Islamic finance needs to be doing or looking at, please.
Well, look, I think the next 12 months or so, whatever period we want to give it, the short term, we'll see not only more activity from the commercial banks, but I think the real powerhouse that will emerge over this period will be the multilateral development banks. So the multilateral banks, the likes of World Bank, IFC, IDB, EBRD, Asian Development Bank, those especially that have done Islamic financings in that list. I think we underestimate sometimes the reach of the MDBs, not only in terms of the products that they have available for things like infrastructure and social development, but also some of the side products that they can offer, which can enhance structures that are put together on a more sort of commercial basis. So I personally see a more transaction flow coming out from MDBs.
Thank you. Ahsan, if your line is okay, do you want to jump into that one?
Thank you, Salman. Can you hear me now? It's difficult. I don't know the issues. 12 to 18 months. I mean, things will get back to normal. Things like
apologies.
Social.
Ahsan, the line is really bad. I'm so sorry. We'll have to.
Yeah.
Very difficult.
No
but thank you again. Maybe close with Ahmad. Ahmad, your views on the next 12, 18 months?
I think no one can really say for certain how we are going to come out of this. That's for sure. What we need to be worried of now is to be prepared with our base on how we are going to approach things as we move forward. As I mentioned, a reflection of our values, and then looking at this disruption in a more reflective manner. With that, things that happen, it affects everyone. So probably we need to make some changes in how we do things. Probably the the question or the debate on risk sharing.
Okay, I think technology has finally gotten to us. We're out of time, but I want to sincerely thank our four esteemed panelists, Nick Jaharis, Ahmed Tarmizi, Hassan Ali, and Mohammed Baracha, for their amazing insights. I look forward to continuing this conversation in the coming weeks and months, and maybe we talk about innovation and technology next. There were a couple of questions on the panel, which I will make sure that the panelists get to, and if we can answer them offline, we will do so. Thank you again, everybody. Please stay safe, stay well, stay healthy. Ramadan Kareem, and happy Eid Mubarak in advance to everybody. Thank you so much for your time, and talk to everyone soon.
Thank you.
Thank you.